when all the monetary energy leaps from gold to Bitcoin, or when it leaps from fiat to Bitcoin, there's this phase transition, and we see it throughout all areas of science. But right now, this is just the first time in human history that we see this creation of a pure digital monetary network. And I want to replace monetary network with energy network, because monetary energy is energy, and money is energy. In fact, money is the highest form of energy. So if we ask the question, what is money? Money is the highest form of energy that human beings can channel. So if I look back through time, human beings as a species prosper by channeling energy. And when we mastered fire, we channeled chemical energy. And when we mastered missiles, we channel kinetic energy. And when we master water and hydraulics, we're actually channeling gravitational energy. The idea of an aqueduct is, well, I'm using gravity to move water 70 miles, or I'm running a water wheel, or I'm floating a 2-ton block in the water, and the gravity's pushing down on the water, and the water is pushing up. And when I dam a stream and I generate hydro energy, well, that's gravity being converted to energy. But if I dam the stream to divert a bunch of fish into my pond, I'm still using gravity. Now, I can channel gravity by dumping a bunch of rocks on your head, but it's not nearly so easy to create a river of rocks as it is to actually just tap into a river of water. And so the mastery of fire and water is the mastery of chemical energy, gravitational energy, eventually thermal energy, and that in the modern era morphed into the mastery of electrical energy and atomic energy. And of course, there's conservation of energy. And when we look at all of these energy networks, I mean, look, 100 guys with bows and arrows are an energy network, right? I'm moving kinetic energy from this side of the battlefield to that side of the battlefield. And a civilization at the mouth of a river with cities up and down the river, right, is sitting on an energy network, right? Just like the Aegean and the Greek civilization was sitting at the middle of an energy network, and they were using gravitational energy to and by wind energy, right? Another form of energy, right, between sails and gravity. I'm taking advantage of these energies. So the theme is humans prosper by channeling energy.
Yeah.
Now, what's the most efficient energy network in the history of the world? Well, it's about to be Bitcoin, because the challenge of humanity is, how do I store energy and transmit energy across time and space and domain? And by domain, I mean perhaps governmental domain. Like, how do I move my energy from New York to Tokyo? And this becomes an interesting question, right? Let's take a typical power grid. Well, I generate power, I channel chemical energy into electrical energy. I lose like 35% of the energy in the coal or in the fossil fuel. When it gets onto the grid, I move it over a high voltage line, and I can move it up to about 500 miles, and I lose 2% of the energy. Mm-hmm. Now it has to get stepped down to 240 volts or lower voltage even to get into your house. I lose, as the voltage steps down, I lose more energy. It's about a 4% loss. If I had pure energy at the power plant, I'm going to lose 6% of the energy to put it into your house 250 miles away. I can't send it 2,000 miles away. I just can't. I can't send it 10,000 miles away. Energy will not move from New York to Tokyo, but I can do New York to Schenectady. Now, when it gets into your house, you have to use it immediately. You can't store it. So let's say I wanted to store it. I need a battery. Well, the absence of a battery prevents a mechanism. The mobile wave is a function of lithium-ion batteries in the palm of your hand. No lithium-ion battery, no smartphone. Now, we're working with modern batteries, Tesla, it's all about the battery, right? And Elon Musk has really driven battery technology. So let's say I put a battery in your house and you pull energy into your house. Well, you've lost 6%. Now, a typical battery, a good one, is going to lose 2% per month. Okay, that means you're going to lose 24% of your energy a year. Well, what does that sound like? It sounds like 24% inflation a year.
Yeah.
It sounds like hyperinflation. It could get worse, right? Hyperinflation is 100% inflation here. Let's say that I have a battery which loses 20% of my power a year. Well, my half-life on my energy that I pulled off the plant is 3.5 years. In 10 years, right?
Yeah.
I'm up to 12.5% of my energy. So the entire civilization is based upon electric power grids and networks, and yet it's not that good. I mean, you really can't store that much power. Anybody that ever put their computer, they charged it and left the computer for a month or 2 months, and you whipped it open, it's like it's drained.
It's dead, yeah.
Okay, so now let's say I want to take $100 million. By the way, I can take $100 million of money and I can buy $100 million of electricity in New York. And I can distribute it to 10 million people in New York as long as they use it today. But, so if they don't use it today, it starts to bleed out, and so this is the loss on the network. Right. Now,
and in a monetary sense, we would say that energy really lacks durability, right? And I think this is important to tie this back to money, is that gold itself, to your point, was an energy network, right? It was whatever productivity couldn't be allocated towards something more economic, we would go and mine gold, such that gold became this claim on savings of humanity, which is what money is. And those savings themselves are the result of all our collective energy utilization up until that point, right? We've been transitioning energy into capital, and then gold or money becomes the network that commands that capital. And then what I think is interesting too is that the scarcity of the gold actually reflects the scarcity of the energy, right? So it maps onto it in a way.
A brilliant insight. And now let's play a thought experiment. Let's take our $100 million worth of monetary energy and let's put it in a power network, and then that runs on copper. And then let's put it into a gold network. If I put it into a copper energy network, I have 24% bleed rate per year by the time it gets to the battery. I lose 6%, and I can't get it more than 500 miles. Okay, so it's a very short-term, short-duration, here and now energy network. Let's put it into a gold network. I put $100 million into gold. Now I can move that $100 million of gold 100 miles. Would I lose 6%? No, probably not 6%, right? I could probably move $100 million of gold 100 miles for $10,000 to $100,000, depending upon how much security I need. So we're talking about 10 basis points. Instead of 600 basis points of loss, 10 basis points. So gold is a more efficient way to move large amounts of energy, short periods of time or short distances. What if I want to move $100 million worth of gold 10,000 miles? Well, that's about 3,000 pounds of gold, like 1.5 tons. So I put it on a global express, costs $10,000 an hour. I put some dudes with guns on it. I fly 16, 18 hours around the world. That's about $180,000 plus another $70,000, $250,000. If I have to fly the plane back, let's just assume I don't. it's 250,000. So now we're up to like 25 basis points. 0.25% is the cost to move it around the world once. Okay. So that's okay. Now, what if I want to deliver $100 million of gold 100 years into the future? By the way, what if I want to deliver $100 million of energy 100 years in the future on copper and batteries? Well, my half-life is at 24%, a 2% bleed a month, right? My half-life is 3.5 years. It's gone completely. And everybody with any common sense knows if you put your laptop charged in your attic for 100 years, it will not be charged in 100 years.
Right,
you cannot store electricity on a copper network or a lithium-ion battery. It's no good. I put it in gold, put it in a vault. Okay. So let's say I put it in a vault in JP Morgan. And I put in a vault in JP Morgan in 1900 in the United States of America. And the United States is the most successful country in the 20th century. We win every war, and JP Morgan remains as a bank, and the vault is, and New York remains. In that case, assuming a 2% mining rate, so assuming a stock to flow of 50 and miners mine 2% more gold a year, the half-life of a gold battery is 35 years. I go from 100 million to 50 million in 35 years to 25 million in 70 years to about 12.5 million in 100 years. So I've depleted my gold battery 87% if the United States wins every war.
Right.
And if JP Morgan isn't a corrupt institution and doesn't fail, and if no one drops a nuclear bomb on New York City.
Right.
If those things don't happen, then I will get 12% of my money back.
So in addition to betting on gold, right, which is governed by natural law, you're also assuming this counterparty risk in the form of the US government, in the form of JP Morgan. You have to bet on stability in the geopolitical landscape as well, right? Because the gold has to be secured, and it has to be secured by institutions.
What if you put $100 million worth of gold into a bank in Frankfurt in 1900? What if you put it in the largest bank in Japan in Tokyo in 1900?
Mm-hmm.
Name a city you could have, and a bank you could have put it in 1900 that would still be there in the year 2000. It's a short list, by the way.
Yeah.
London, Switzerland, Zurich, New York. You would have failed in Paris, Berlin, anywhere in Eastern Europe. You would have failed in Moscow. You would have lost it all in Beijing. You would have lost it in Tokyo. You would have lost it all anywhere south of the Rio Grande.
Yeah. And in the
you
U.S.?
Lost it everywhere in Africa.
Possibly would Executive Order 6102 have impacted you in the U.S.?
And you would have lost it in the U.S.
Yeah.
Okay. So isn't it ironic? Okay. So can't we reduce it down to maybe Switzerland? Maybe.
Yeah.
Like it's an interesting exercise for the reader, but the counterparty risk on gold is at the municipal level, the state level, the federal level, and the corporate level. And that's and over there's a phrase, right? Over a long enough timeline, the mortality rate is 100%.
Right. Yeah. Yeah. In the long run, we're all dead, right? Sort of. I think Keynes may have said that.
He said it. Robert Heinlein wrote a book called Lifeline, and he said, over a long enough timeline, the mortality rate is 100%.
Yeah.
Okay. And so in this particular case, back to our gold network. We have a gold network and we want to move money. So I put $100 million in gold and I want to move it around. Well, it's 25 basis points every time I move it around the world. If I move it once a quarter, it's 1% bleed a year. If I move it once a quarter. Okay. If I mine it, it's 2% bleed a year. That gets me to 3% bleed a year. divide that into 70, and every 22 years, that's the half-life of gold. Energy on a gold network has a half-life of 22 years at best. When you throw in the counterparty risk and the need to move it around, let's just assume we're moving it around so we don't lose it. You're just down to now the issue of technology and commodity risk. And this is an important point. Gold is the king of commodities. Gold is the greatest of all human commodities. But my first job at DuPont was I built computer simulations of commodities and specialty chemical networks. And let me tell you what people in that business think. They think commodity is a dirty word. The first thing I learned is commodity is awful. Nobody wants to be in a commodity business. And here's the reason commodities are awful. If I actually create a factory that creates a commodity, say gasoline, the only thing it can do is create gasoline. If I invest $10 billion into a gasoline refinery, my fixed costs are $10 billion. The ideal rational price for me to make a profit, call it $4 a gallon, but my variable cost is $1.50 a gallon because I've got all these billions of dollars in the factory. What happens is when I create commodity refineries, when the price goes below the profitable point, I can't do it. I will still keep running the factory because I've got a variable margin. I'm generating cash flow, even though I'm driving the price down for everybody else in the business. So it's possible in a commodity business for every single producer to be losing money and from them to all be acting irrationally, and they're all pumping out the commodity, be it silver. If you're a gold miner, what can you do other than mine gold?
Right.
Once I've gone and I've invested $100 billion in mining gold, if the price of gold is cut in half, but my variable cost is $400 an ounce and it's $800 an ounce, I'm mining gold and selling it at $800 an ounce. I'm selling it at $700 an ounce. I'm selling it at $600. When it gets to $500, I'm selling it because the market is not rational. I can't transmute my $100 billion of gold mining capital into Google stock.
Right. The switching costs are too high. It's just not possible.
And by the way, maybe I've been captured by the government. Like maybe a certain government wants to mine gold. Maybe I can't legally stop, even if I wanted to stop. So when you have a commodity business where people have specialized capital and they make those investments, what happens over time everywhere, in every industry, in every commodity, in the history of the world, is the producers overproduce the commodity because, in the phrase of Hotel California, you can check in anytime you want. But you can it's a one-way route.
Right.
You go in, you can't get out. So so that takes us to this real issue of gold, or the real risk of gold, which is gold price goes up by a factor of 10. Capital gets attracted into commodity production. It's a feedback. People produce more. Gold price comes down. People keep producing to try to recover their cash flows. Lots of intelligent people become desperate. When men are desperate, they invent new techniques to produce more gold. They keep producing because they don't have a choice. They will produce down until the variable cost equals the price. Then they will keep producing below variable cost because it's possible that they're in a situation where they can lay off. For example, a government that takes ownership of a gold mine will produce below variable cost in order to maintain jobs.
We'll subsidize it, yeah.
Where does this happen? Automobiles and airlines. This is why you don't ever want to be a budget airline, because a government will operate airline flights at a variable cost loss in order to avoid shutting down the airline, right? If you're Singapore and you turn off the airlines because they're not profitable, you turned off your bridge to the world. The politicians will run the airline below variable cost. If I want to keep jobs, and how many countries want to project jobs? If I want to project jobs, I will produce something below the variable cost and sell it below the variable cost. We do that with anything that is politically charged. When a government decides education, healthcare, transportation, automobiles, local manufacturing, security, defense. Defense is a great example of something that we produce,
Right.
whether we like it or not, at a cost that's higher than potentially the value and use of it.
Mhm.
And we can't stop. It creates this industrial complex.